The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady. Happy first day of summer. It's a wonderful thing. We're all moving forward. Isn't that great? The COVID is, we hope, going to be in the rearview mirror one of these days, and our life is going forward. And speaking of going forward, July the 15th is just a couple, 2-3 weeks away, and that's the deadline for filing your 2019 tax return. And so we want to talk about that. We want to help you with some last-minute stuff. Even if you've already filed, you know, there's things that are still open for you to reduce the liability that you might have already had. I mean, you can amend your last year's returns, these returns up to 3 years. So if you here's something that you should have done, make sure you do it because it'll save you money. And I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday. I heard so tomorrow is Father's Day, and happy Father's Day to all the fathers out there. But I heard you're a new
first day of
summer. I heard you're a new mommy today.
I am. I got a puppy.
Is she adorable?
Hard. It's hard, huh?
Isn't she adorable?
She's adorable.
Oh my God.
She's, you know, I don't know. The jury's out. We'll see.
I can't wait to meet her.
Okay.
Be my sister.
Very scary for me.
Yeah.
Children seem easier. I had more stuff with this dog than with a baby. So anyway, yes, so I'm a new puppy mama.
And then we got a father here to the right. Happy Father's Day.
Hello, Esther.
Happy Father's Day. Okay, and we want to talk about last-minute things. July 15th is in the not too far off. Our offices are open, not all of them, but many of them. And it's interesting, you know, normally tax season is when it's cold outside, and so we always have to make sure our furnaces are working good. Now all of a sudden our staff said, you know, we're really hot in these offices. We don't have air conditioning in many of our offices because we don't staff the offices in the summertime. So we are getting individual air conditioners for our offices. So that's a new thing that we have to deal with. This year was full of lots of surprises, right?
Bizarre.
Every turn of the way.
Bizarre.
Right. Okay, so what did we want to talk about before we get to the calls? 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930.
And I guess I just want to say, get her done. So if you need your tax return done, we will stay as late or come in as early as we have to.
But there's a couple things with PPP people should know about, right?
Yep.
There's still PPP money out there, like $150 million still out there waiting for people to apply.
So if you're self-employed, right?
Yep.
Even if you don't have employees, you want to apply to get the payroll protection plan money, which in most cases are going to turn into a grant.
Right.
That's right.
Yep. And they shortened the application. We're trying to see if it really works the way they're supposed to. We have calls into them, so we will keep you updated on that as well.
And then
It is a much easier application to fill out to get the loan turned back into a grant. But the way the computation works out, it looks like they're penalizing you, and that's not what we understood. But again, we'll get to the bottom of it. Again, anybody that has any questions, you can call EG Tax. We are there to help you. You can go to our website at egtax.com. We don't charge to answer your tax
And then,
questions.
Esther, I wanted to say,
talk to a real person.
If you're a church or a parishioner at a church, or if you're a minister, don't forget you can also apply for the PPP because
for the churches.
Yeah, for the churches. Yeah.
I mean, you can't apply
If you're a parishioner,
yourself,
but you
right.
should nudge and tell the people at the church that this is open
Right,
and on the
because we had
table for
somebody
them.
yesterday call and said, gee, nobody let our denomination know. Well, we certainly have tried. I mean, we've been on Christian radio, we've done seminars, we're trying to let anybody know. But churches qualify for the payroll protection plan as well. And I know a lot of people say, no, that seems to be a violation of church and state. Not really. it's available to you, and you have employees, or you're the pastor, you can get this grant. So again, if you need help, give EG Tax a call. We're very happy to help you. Right?
Definitely.
All right. Why don't we go to Ed, who's been waiting for so long? Hi, Ed. How can we help you, sir?
Yes, hi, Esther. Yeah, I'm calling about this situation. I sent my paper tax return to the IRS in Kansas City last March. Still waiting for a refund. Is this?
That's because I haven't processed it yet, Ed. What we suggest you do, and it's the first thing I was going to talk about today, is file electronically with the direct deposit. Just because you've sent in a paper return doesn't preclude you from filing that return electronically. So just get online, send it electronically, and you'll get your money in about 10 days.
Yeah, and I did
They aren't processing it until after July the 15th.
I did a conference call last week with somebody who did a paper return, and we talked to an IRS practitioner, a priority person, an agent, and he said that office that was doing paper returns were furloughed, and they're just coming back to work. He said, I don't even see it in there yet because they're just starting to
Yeah,
tackle
give them
those.
at least 60 more days.
Right. So if you want your money in this calendar year, I would suggest that you file electronically. That's really the way they want you to do it. It'll be processed. You'll get your money in about 15 to 20 days. And if you need help, we will be very happy to do that for you. Okay?
Okay, so it's okay to file electronically, even though
It certainly is. Then when they finally open it up, they'll say, that darn Ed, he did this already. And they'll set it aside.
And you could help me file electronically?
We certainly will.
Okay, thanks a lot.
All right, Ed. And, you know, that's interesting because last week we had several callers that said the same thing. And in my list of things I wanted people to know about, the first one was file electronically with the direct deposit, and you should get your refund in less than 21 days. If you're somebody that loves to send in paper returns, they really don't want you to send in paper returns. That's why they didn't open them up yet.
Yeah,
Because
and
they don't want you to file that way.
also, I've been calling a lot of people who did their return electronically, a handful. What I've been noticing, haven't gotten their refund. There are people that had 1095As and they didn't realize it. So I've been calling and we didn't get a refund. We didn't get a refund.
Explain what a 1095A is.
Yeah, that's if you had health care through the marketplace, even if it was a month or 2 months or for the whole year. And so if you had health care through any marketplace, the New York State marketplace, or this lady lived in a different state, so they have a marketplace too, you have to do an 8962 and you have to reconcile that 1095 to know if they gave you too much of a stipend or too little of a stipend. So the IRS hasn't had a chance to mail out those letters yet, and you have to get them the
So your
1095A.
refund- Those people are having their refund held up electronically, even if they filed,
Yeah.
held up, even if they filed electronically.
Correct.
So again, if you need any help, you can call us at 632-7886 at our corporate office, or go to our website at egtax.com, and we're very happy to help you. But if you sent in a paper return, you still have time to file electronically, and you want to do that if you want your refund shortly, right?
Right.
All right. One other thing before we go to break. Again, 8030930, 8030930, star 930 on a cell phone. Let me sneak Jim in before the break. Hey, Jim, how can we help you, sir?
Hi, good afternoon. I have an income property question.
Okay.
Purchased the property in 1993, lived in one apartment, rented out the other, and moved out in 1998 and rented out apartments since then. I'm debating selling it, and I was wondering what kind of tax hit I would be taking.
Okay. Well, obviously you're going to have, if you're going to sell it at a gain, number one, you'd have a gain on the rental property, number one. Number two, all the depreciation taken over those years gets added into, or reduces, actually, what you paid for the property. So let's just do simple math. Let's say you paid $100,000 for it, and the depreciation that you've taken is $15,000, then the IRS considers that you only paid $85 for it. And if you sell it for $110, you end up with a gain of $25,000. So that's kind of how it works, unless you do an exchange, a tax-free exchange, and that will get you out of it completely if you wanted to get into another piece of investment property.
Right, because it sounds like the house would be almost fully depreciated right now.
Would there be any advantage to holding on to it longer
For what? The depreciation.
Taxes.
So eventually, there's going to be a zero basis, so anything you sell it for is going to be fully taxable. And I will tell you, I don't know what's going to happen. I don't have a crystal ball. But if the wrong things happen in November, you would find taxes are going up probably. And it would be not a good thing. So if you don't want to pay the taxes and you're interested in getting other investment property, you could do a tax-free exchange, pay no taxes, or just bite the bullet and pay the taxes on the gain of the property, and the maximum you'd pay is 20%.
Jim, are you a high income earner? You and your wife, if you're married?
No.
Okay, because
if you're in the 15% bracket or lower, then you'd pay 0%. So but what I'd suggest you do, and anybody that has these kind of questions, you can call us at the office and we'll run through the whole figures for you so you know exactly what the bite is going to be if you should sell it.
Thank you. And what's the turnover time if I decide to purchase another piece of property?
You mean as far as on the tax-free exchange?
Yeah, from the time I sell to the time I purchase a new property.
Can't have the money in your hand ever.
Right. It's really not a sale, it's an exchange. So I have to identify the property that you're going to exchange and consummate that sale, I believe, within 6 months. But I'd suggest you call, if you think that's going to be something you'd look at, I'd suggest you call Russ Gullo, because he's the exchange guru in New York. And he's right here in Western New York, and he's a wonderful guy. And he'll be very happy to help you.
Yeah, 675-1500.
Yeah, and that money, if you're doing an exchange, that money can never touch your hand. You have to have a mediator involved from the very beginning, from the onset.
That's right.
Thank you very much. Thank you. Have a great day.
All right, you too. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-903-8030930, and we're going to take a short break, and we'll be back with your calls on the other side. Hey, we think of you as family. I'm Esther Gullius, the tax lady. Happy first day of summer. Happy Father's Day for you guys who are dads, from us grateful women to have strong men in our lives. And of course, Christopher, happy Father's Day to you.
Thank you. Thank you.
Okay, we got calls coming in, 8030930, 8030930, star 930 on cell phone. Can text us at 716-8030930. Before I get to the calls, one of the things with July the 15th breathing down our neck, if you owe money, that's not good. You got to make sure that you can get that payment all set. I mean, they gave you the extra 3 months, but there are options. You can set up a payment program, and you're going to find that they're really great about taking payments, number one. And if you absolutely can't pay because your whole world turned upside down, maybe you lost your job, you have the inability to pay, then we have something called an offer and compromise that EG Tax can help you with, right? That you're kind of our offer and compromise specialist.
Yep. So I love doing offers and compromises because the nice thing is when you have this dead weight around your ankle, it ruins your life, your feelings, your credit, and so you don't want tax liens and tax judgments because it just is a big ding. So there's some brevity when you can get rid of it. You hear those commercials all the time about paying pennies on the dollar, and that's what an offer and compromise is essentially.
But not everybody qualifies, right? Let's get how do you qualify?
Well, so it's doubt to collectability. So the IRS isn't going to let somebody who makes $200,000 a year and has a house that's worth $200,000 and with $100,000 in equity. So it's doubt to collectability. So a candidate might be somebody who has student loans, who has a lot of IRS debt, who doesn't make oodles and oodles of money.
Or maybe became disabled or lost their job, right?
Absolutely. So it's doubt to collectability. Now, if you're somebody on the contrary who makes a lot of money, who has a house with equity, has money in your pension and your 401k, your collectability status would not fit that criteria. So it's
so really it's a way to help people that really need help.
Yep.
Right?
Yep.
So if you really need help and they've been garnishing your wages or sending nasty grams to you and you just know you can't do it, give EG Tax a call, ask for Tiffany, and she'll help you to set up an offer and compromise. And you've been successful at this. right?
Yep. I've had several people who just emailed me, called me, and I've got power of attorney, so I find out that they were accepted, which is really exciting. It's just, and New York State also has an offer and compromise program too, and so we can do it both for the federal and the state, or we could just do one or the other. And so it's
if
a
you
great
owe money
tool.
And you can't pay, there is a way to get around it. As in most things in our world, there's a way to get around a lot of things. If you don't do anything about it, then you've just shot yourself in the foot, and we certainly want to help. Why don't we go back to the phones, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, and we have Mike. Hey, Mike, how can we help you, sir? Hello, Mike.
Hi, thank you for taking my call.
My pleasure.
Just wondering, I haven't received my stimulus check yet, and if there's any way to check on if I'll be getting it or...
Absolutely, right, guys?
Yep.
There's on the IRS's website, on the left-hand side, there's a button that says,
economic stimulus.
yep, you click that, and then it will lead you to another, like 3 more clicks, and then you got to enter your social, address, date of birth, and it will let you know if you're getting, when your check was released or your debit card was released.
Now, unless you made a lot of money or owe back child support, did you make more than $75,000 for 18?
For 18, I might have been just under that.
Okay.
And are you single, not married, right?
I'm single, yes.
All right, so, and in 19, did you make over 75?
No, I actually got laid off at 19.
All right, so you certainly, and you don't have outstanding child support, right?
Nothing.
Okay, so that should be coming to you. Now, it is possible that they send it to you in a debit card and you threw that away, because that happens. So when you go to that website that Chris was just telling you about, it'll tell you when to expect it, and if you need help, call us on Monday, we'll help.
Or you can even, the office is open today too. You could call there now, Deb. There's 2 Debs working, and they can help you.
Right.
Yeah, and I've also been noticing when it's this late in the game, some people, they moved, they went to a different address, and there's a form the IRS wants you to fill out. If you haven't gotten it, I can't think of the form number right now, but it's actually a lost refund form, but they want you to fill out this form for the lost stimulus. So if you need us to get you that form, but you would tell by going to that website, and if it says it was put in the mail May 22nd and you still haven't gotten it yet, that's a good indicator that it's lost.
Yeah, or if they sent the
credit card
direct payment on a credit card, and you thought it was a junk mail, or maybe the postman took it. I'm only kidding. Poor public servants, they've gotten the brunt of everything here lately. Well, let's go back to the phones. We got John. Hey, John, how can we help you, sir?
Hi, Esther.
Hi.
I'm a retired teacher, and I have a few of these 403B programs.
Yep.
And I have a question. Can I turn them into a self-directed IRA and then merge them into one, or do I have to leave them all separate?
Okay, so unless there's a reason why your employer won't allow you to do a rollover, then you can roll them over into an IRA.
Well,
certainly.
it's the 403B, and I think there are restrictions on the 403B. So I would, if I were you, I would call the financial guys, because they do deal with the 403Bs.
But if they do allow that, then he could certainly do a rollover if they allow it into an IRA, and then you could do a self-directed IRA. Self-directed IRAs sound like panacea because you think you're managing it yourself, but the truth is you're not allowed to touch any of the money, and there's a lot of responsibility doing a self-directed IRA. So before you do it, make sure you know what you're doing.
Okay. And I've got one other question. I had filed a 2016 account manually. Can you still do that electronically? Or
Yes, you can.
No, not electronically.
That's done. Okay.
Wait, you said 16. I'm sorry, missed the year. Yeah, 16, it has to be, once it's done, it's done. Yep.
Yeah.
They have to go paper.
And
Yep.
16, you can, 16
And
is
make sure
done.
you send it in certified mail because we are knocking on that
Right,
statute.
and don't be surprised that they haven't processed it yet, if you haven't gotten it yet, because again, that's a paper return.
Okay, thank you very much.
Okay? All right, thank you. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930.
That's going to be interesting what they're going to do, because with the deadline being July 15th for 2016 now, what are they going to do with all these paper returns that they're not going to process till after July 15th? Are they going to still accept them, or are they going to say, I'm sorry, you lose,
Well, I mean,
and then
it
you
seems
have to
me
prove
that
the
they
mailing?
have to do the mailing if it's postmarked in time.
Right. I mean, it's going to be an interesting,
Conundrum.
yes.
Right?
Yes.
Okay, and I'm Esther Gullish, the tax lady, 8030930, star 930 on a cell phone. Wanted to do this before we take a break, is that if you find that your income has gone down, maybe you're a realtor, things aren't as hot because of the COVID, and your income has gone down, make sure you adjust your estimates.
Yeah.
Because you don't have to send in all the money that was projected if this year is not what you had projected. So you can adjust your estimated payments, and we'll be very happy to help you with that, because you don't have to pay in what you're not going
And
to
the first one isn't due to July 15th.
And then the second one is due on
July
July
15th.
July 15th. Okay, I'm Esther Gullius, the tax lady. We're going to take a short break for the news. We'll be back on the other side with your comments and questions. We are family. I'm Esther Gullius, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. We certainly want to hear what you have to say. Give us a jingle. We're getting ready for July the 15th. I can't believe I'm saying July 15th instead of April the 15th. If you owe money, you want to make sure you get money. And I was just talking before the news break about how you should adjust your estimates if your income's gone down. By the same token, if your income went up, you want to adjust your estimates as well. And really, many of you that are collecting that extra $600 a week in unemployment, there's some concern as to whether it's taxable. It is. So you might want to do estimates on that money, or certainly set the money aside, because you may be surprised.
Right. The New York State unemployment, they will do the 10% federal and the 2.5% state. But the federal unemployment will only do federal withholding. They're not doing state withholding. So you got to make sure you put that aside, because $600, if you got it back from March 5th,
I'm telling
yep,
you.
600 to the end of July, so you're looking April, May, June, July, that's 4 months, so 18 weeks times 6, that's a lot of money that New York State's sitting there going with the like a Saint Bernard, the drool's coming out of their mouth going, we're going to get all this money next year.
And you would know about St. Bernard's because Chris has a St. Bernard.
Yes,
right?
yes, but she never drooled, praise.
She does
praise.
when she wants oranges.
Oranges, yes.
Mia loves oranges. Okay, the other thing is, looking ahead to July the 15th, we are starting to get really jam-packed in our offices. So if you're somebody that thinks you're gonna get your stuff together here, make your appointment now. Make it out for 10 days or whatever, so it gives you time. But then you can make sure that you have your slot, so we can get you set up. And remember, you might owe money, and so getting it done earlier rather than later helps you to pre-plan. And again, you can take up to $100,000 out of your 401k at work without penalty if you're under the age of 59 and a half. We're not suggesting you would want to do that, but in the event you find that you're short, that's a way around it. And again, it's because of the coronavirus help that the IRS is trying to help you with, right?
Yep.
Right.
Okay, I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930.
Oh, we've got text, Esther, and we just
Okay.
didn't have it scrolled the right way.
Oh, okay. What is the text, Steph?
Hi, Esther and Chris and Tiffany. My son, who is a high school senior this year, took out an undergraduate college course while he was in high school, and he wants to know if you can claim it on if we can claim it on our tax return.
Okay, so that would be, what do they call that?
Oh, they are the AP classes.
That's it, AP
Yeah.
classes.
Yep. And unfortunately, they do not count.
He received a 1098T.
Right.
It says.
Right, because this college does bill them, but they are a registered student of the high school, not the college. And some colleges don't take those credits anyways. And you really don't want to waste your AOTC on a $400 class. You want to wait till they're in college to get that college credit, to get the full $2,500 credit.
Well, you would never do it for that.
Right, you would
I
use
know,
lifetime.
but I'm
Lifetime
just...
learning, right?
You would use lifetime.
You do lifetime learning.
Yeah, I mean, as I have called NATP, but we won't get into that
No,
now.
I would be lifetime learning is what you would do.
Yeah, that's
not
I
the
called
AOTC.
NATP, and they said you
Right.
could use lifetime
Yeah,
learning
so
for
you
it.
use lifetime learning, not the AOTC. The AOTC would be for the first year of qualified education, like Chris was talking about, when you're matriculated as a student of that. But any kind of higher education would qualify for lifetime learning. Would be 20%.
Yeah.
So that helps a little bit. 20% of
Yeah,
what they pay.
and then as I have been working from home for months now, and I will continue, will I be able to claim the office and home deduction for 2020? That's a
Not
text.
if you're an employee. If you're an employee, that deduction went away on the federal, but it is deductible on New York State. So yes and no, or no and yes. No on the federal, yes on the state.
Right.
Okay.
Yeah, so because with the tax reform, they got rid of job expenses. And so an office and home is something that you do as a job expense. And like Esther said, that's gone on the federal, but potentially available on the state. So you want to keep track of all your utilities, all your repairs to your house, your office supplies.
And the definition of an office and home is a room, 4 walls and a door, and it has to be a room solely and exclusively used for business.
Right. So if you're eating at the dining room table, that's not going to work. You know?
Right. And I know there was talk about possibly bringing that back for the federal, but we'll have to wait and see.
And I do think you're going to find out before the end of the year there's going to be a lot more tax changes that are coming down the pike. And so, of course, Ask the Tax Lady's going to let you know, because that's our job. All right, the other thing is I wanted to talk about as we're approaching July the 15th, filing status really makes a difference. And many times I'll have somebody that'll say, I want to file single head of the house because I have my own apartment. That isn't what makes you head of the household.
Right.
In order to be head of the household, you have to have a qualifying individual living in your home. So you by yourself is not going to qualify. But many times people think that they can file head of the household when in fact they can't. If you are legally single as of the end of the year and you have no one that you're maintaining the household for, you are single. However, if you're married as of the last day of the year and your spouse hasn't lived with you for the last 6 months and you maintain a home for a child, even though you're still legally married, in that case, what happens?
You're head of household.
Head of household,
Yep.
right? Which could save you a lot of money, and you might qualify for the earned income credit as well. So, and that's another thing. With people on unemployment will not allow you to get earned income credit, so unless you go back to work. So you want to make sure that if you're somebody that's been relying on the earned income credit, that you go back to work as soon as you can in order to get the earned income credit, because unemployment won't qualify.
That's a really good point.
Right?
Yep.
Okay, let's go back to the phones. We'll talk to Marty. Hey, Marty, how are you, sir?
Oh, very good, Esther. How are you today?
I'm great. What can we help you with?
Well, we have a cottage over in Fort Erie that was, we ended up buying it from the estate. Family's had it for like 60 years over there. And recently, we bought it. And we went through all the normal fees and everything. And then we found out about this new tax that the Canadian government in Ontario has assessed, which is called the Greater Golden Horseshoe Tax. So
wow, what a nice tax that sounds like.
Left all the puns out. But so what happened is that if if your family has inheritance, let's say, it's a very generational type place. So year after year, families hand over the cottages to the next generation.
Sure.
Well, now what they've done is they have this golden horseshoe tax. And so by adding our 3 children to the title of our cottage, we were assessed
Capital gains tax.
no, Chris, I know where you're going, but yes, we had to pay capital gains, which is okay. But in addition to capital gains, with this horseshoe tax, we had to pay a flat 15% on the total price of the property that has been in the family for 60 years, based on
And
the...
that was to Canada, right?
Yes, so we had to pay an additional $17,000
Wow.
in taxes because we are a foreigner and because we added our children onto the title.
Yep.
Now, was it income tax or not?
It is. You have to do a non-resident. I've just seen that twice this week alone, where people.
So he'll get a foreign tax credit.
Yep. Yeah, it's whenever you change the title up in Canada, you have to pay capital gains.
But the good thing is, if there's not much
What?
good, but you're not going to be double taxed because
It's
on
not-
the federal return you'll get a foreign tax credit.
Right. Okay. So, but if you sell the property, okay, and Chris is right. Yes, we would pay the capital gains, but this isn't considered capital gains. This is over and above capital gains. So we have friends that have had property on the water for close to 100 years. So they just wanted to add their children because they're getting up in age like we are. And they just found out from their Canadian lawyer that the assessment on their property for this new golden horseshoe tax is $90,000.
Okay, but here's the thing. If it's an assessment on real estate, then it's going to be limited to the $10,000 SALT deduction. If it's an income tax, then you're going to get a foreign tax credit. So that would mean on your federal return you get a credit. So you have to decide, you have to figure out whether it is property taxes, a special assessment, or income tax.
Okay.
Because different things are given credit on your federal return differently. So that's what you have to find out. Have you found that out yet, Chris?
No, I'm looking on my phone right now as we're going, but I can tell you if you want to call Marcus on Monday, he's our Canadian specialist, and he'll be able to help you
Right,
with
but
that as well.
If it's a special assessment, then it's going to go to basis. If it's
No,
real estate taxes, then it's going to be limited to SALT. And if it's income taxes, you'll get a foreign tax credit. Yeah, go on, Chris.
Yeah, it's for like around Lake Erie. On April 21st, 2017, the province introduced a 15% tax on the purchase or acquisition of an interest in a regional property located in the greater Golden Horseshoe region by individuals who are not citizens or permanent residents of Canada, or by a foreign corporation and taxable trustees. The non-resident speculation tax applies in addition to the general land transfer tax in Ontario.
So really, it sounds like an assessment, right?
Yep.
Special assessment. So, and that would go to basis, which means when you sell it, that'll be an expense. It'll increase the cost basis and reduce the gain on the back end. So. Okay, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone.
Yeah, they're getting the money now, because if it's going from generation to generation, nobody's ever going to collect the money. So Canada is saying we want our share now. So
but at some point in time, if it's going to basis, you know, at least that means that that's an expense that somebody's not going to have to pay.
Right, and they don't have what I found out too. Canada, when you inherit a house, you don't get the stepped up value.
Right.
So very different than the U.S. laws.
Right. And the Golden Horseshoe is just that whole Toronto, St. Catharines, that whole bay around to Buffalo. It's because it's shaped like a horseshoe, and there's so much money up there.
Yes.
Right?
Yep.
Okay, let's go take a short break. I'm Esther Gullius, the tax lady. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We'll talk to you on the other side.
We are family.
To us, your family. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And you can text us at 716-8030930. And let's see, I wanted to also talk to you about getting ready for July the 15th. If you're somebody that was going to claim maybe your 21-year-old kid that's in college, maybe you're not sure whether it'd be better to claim them or not. Maybe
it's the half year. They graduated in May.
Right, and you're maybe not going to get much of an education credit. For you to claim them, you'll get $500, but if they don't get claimed, they'll get a $1,200 stimulus. So that's something that should go into the equation when you're thinking about doing those tax returns.
Yep,
right?
yep. I know when we're planning, that's always a new thing in the mix this year.
Right. Let's see. Other things I want to talk about is, and make sure that if you're doing all your tax returns, that you take your credits. There's child tax credit for kids that are under the age of 17. Children over the age of 17, all you would get is the $500 credit. But remember, if you get the $500 credit, then they don't get the $1,200 stimulus. So again, think about that. Education credits, there's lifetime learning credits, which are 20% of what you pay for higher education. And the American Opportunity Tax Credit can be up to $2,500. And the state of New York, same thing, they give you a nice refundable credit on the state of New York. So don't forget those credits. Earned income credit, we talked about. If you have children that are living with you, even if they're being claimed by their non-custodial other parent, and you have wages, relatively moderate wages, you can get money for them on your tax return. It's called an earned income credit, and you don't have to pay.
And there's and there's the non-custodial EIC for New York, where you would have to pay.
Credit,
yep,
right?
You have to pay your child support through your payroll, so it goes from your payroll to New York State, then to the mother of the child, which is it's an incentive. This way, you make sure your child support gets paid, and you get a little bit of a benefit from it.
And then don't forget if you're
mostly dads, then right? Because mostly it's dads who have their child support collected through their payroll through the New York State Child Collection Agency, and so if you would have qualified for the earned income credit, but mom's claiming the kid as a dependent, you have a credit on New York State, the earned income credit for non-custodial parents.
And don't forget, if you're an active volunteer fireman, there's the fireman credit, and so thank you. $200. So don't forget to take advantage of that, and because we thank those people for their services all the time.
And then businesses, there's all kind of things that are in the law. Under the CARES Act, there's all kinds of things. Don't forget about the PPP. We talked about that payroll protection plan. The employee protection credit, where you can get up to $5,000 for the first $10,000 you pay to an employee, which is a refundable credit if you haven't gotten PPP money. So if
or EIDL.
PPP, or EIDL. And then there's the FICA deferral too. So there's all those things that are in the tax law that you want to make sure that you take advantage of going forward and before you file your tax return on July the 15th.
That's right. There's all those little things which make a big difference. It's like baking a cake.
All right. I'm Esther Gullius, the tax lady, 8030930. 8030930, star 930 on a cell phone. Text us at 716-8030930.
You know, another thing, Esther, is those brokerage statements from Smith Barney and Wells Fargo. People really struggle with those, and so you really want to make sure that you do a good job. I was thinking we could have a whole class in teaching our staff on how to use those brokerage statements, and so make sure you look. If it says that there's no basis, make sure you investigate. What were you going to say?
That's the problem when people are doing their own return and they don't know what they don't know, so many times they don't put those sales in, and so what happens is they didn't realize it was a sale of stock, and they'll say, oh, my broker just moved some things around. Well, that's a sale, and if you don't report it, then they're going to send you a bill.
Yeah, a big bill.
And so you want to make sure that you have time now to have a double check to make sure that you know what you're doing, right? Okay, then what else we got here? And the other thing is, depreciation has been loosened up. So if you're a business person that bought assets and you're still using the old law for depreciation, you're not taking as much as you're entitled to, that's something you want to take a look at, because changing your depreciation method on new assets can really save you a lot of money, both on FICA and income tax.
Yeah, and you did, Chris, you were doing a tax return the other day, and somebody did their depreciation wrong on the state, because the federal and the state don't always necessarily have the same rules for depreciation. What was the issue with that return
Well,
you were doing?
the business didn't operate in 2018, but the person themselves took the depreciation off on New York State. They thought their program, because they didn't do it on the federal, wouldn't do it on New York, but it did. So, you got to be careful with software. They don't.
Right. I mean, software does a great job, but if garbage in and garbage out, right?
Yep.
You have to watch, because they do everything mathematically correct. However, the tax law might be remiss, so you want to make sure that you know what the heck you're doing. Rental losses are limited or not allowed if your income exceeds $150,000 if you're filing a joint return, unless you're a real estate professional.
Right, where you have 750 hours in a year doing your rental property, then you can take your losses.
Even though it would normally be suspended. So
Yep.
if you're somebody that's a real estate professional and your software package has limited or not allowed you to take the losses, and you're a real estate professional, and this is your major source of income, and you spend at least 750 hours a year managing those properties, you want to amend your returns because you got lots of money coming back.
Right.
Right?
Yep.
Okay, let's go back to the phones. Hello.
Hello,
Mr. Goliath.
Gina.
How are you, my dear?
Quick
Hello.
question. I called last week at the end and we couldn't finish it. I need to know, we just sold a rental property. We bought it for $34,000. We sold it for $75,000. Do I pay taxes, the capital gains tax, on the $41,000?
How long have you held the property for?
I think it's about 5 or 6 years.
So it's the amount of money you paid for the house plus the improvements, less the depreciation, gives you an adjusted basis. You subtract the adjusted basis from the amount you sold it for, less your expensive sale, and that's what's going to be taxable.
So it's not on the whole $75,000. It's just on, like you said. Okay. And do I pay that like when I go to do my taxes?
That's right, when your taxes are due, which we think next year will be April the 15th, God willing, and the creek all right, right?
Right, right.
Yeah.
All right.
I mean, after this year, I was talking to somebody the other day, and they were saying, I was telling them about what I think is going to happen, because I think that we're just in the entry phases of all the backlash of the shutting down the economy, and they said, that could never happen. I said, wait a minute, who would have thought on March the 24th that everybody would be told to stay home, you know, and that everybody was going to have to wear masks and not be able to go anywhere? I mean, who would have thought? So the stranger things have happened, but let's hope that the coronavirus is just in the rear view mirror.
And I'm sorry, I was taking a pause. Did she say she's setting a rental or a second house?
It was a rental.
It was a rental, yeah. So,
yeah.
Make sure all those
Gina,
selling
and if you need any
expenses.
help, just give us a call.
Gina, make sure you keep track of all those selling expenses, the real estate agent, the commission for the lawyer costs. Those all will reduce your gain. So make sure you keep track of all those expenses.
Okay, great. And like we put a porch on the house, would that all come?
Yep.
Right, and so, like I said, it's all what you bought it for, plus your improvements, less the depreciation, gives you an adjusted
Selling
basis,
expenses.
plus your expensive sale.
I thought. Okay.
And from what you paid for it, and that's going to be your gain.
Really good question.
Okay, thank you, Gina. Okay, and then other things I wanted to get to is you can still put money into an IRA for 2019 up to July the 15th, and your SEP if you're self-employed. So it's a great opportunity to reduce your tax liability. And even if you already filed your return and you didn't put money into an IRA or an SEP, you still have to July the 15th to do that, right? And you can amend your return. If you find that you're with your back against the wall, bankruptcy is definitely an option. Your debt forgiveness is taxable unless you're insolvent or went bankrupt. And so nobody likes to think about the fact that they might have to do a bankruptcy, but sometimes that's the best thing that you can do to move forward financially.
Right. And those who filed sales tax quarterly, New York State was supposed to be due today, but I believe they're giving you to the 23rd. They're giving you 3 extra days, but get them in.
Yay, yay. The other thing is if you're somebody that had sale of stock, capital assets, qualified dividends, you want to make sure you use the Schedule D worksheet to compute your tax liability. If you don't, you overpay your taxes. So let's say you had $10,000 in long-term capital gains and qualified dividends, and you're in the 15% bracket federal, and you don't use the worksheet, you're going to pay $1,500 in taxes. But if you use the worksheet, you'd pay zero. Zero, 1,500.
I'll go with the zero.
1,500, right. So, you know, and a lot of times people say, well, it's so confusing. It's confusing, true, but it's a money saver. So you want to make sure that you use the Schedule D worksheet, especially those of you that do it longhand. And it's a lot like reading Sanskrit, I understand. And the other thing is you want to make sure as the year progresses, if you're self-employed, look into doing becoming an LLC, a limited liability company, because it limits your liability, right?
Right.
And people sue.
Yep, definitely. I know I had a gentleman this week who had like 4 rental properties, and they all had no mortgages, and he was selling a business, and he was just going to do his rentals. I said, are your rentals in LLCs? He goes, no. I said, why not? He goes, what do you mean? I said, if somebody gets hurt and they can take all your properties. He goes, what? So I said, you better start looking into LLCs
and
and
personal assets and everything. But the limited liability company protects your other assets.
Yep.
The only thing at risk would be whatever
is inside that
the
LLC.
limited liability company,
Yep.
as long as you're acting as a business. So, and EG Tax will help you with that, as well as tax planning. So give EG Tax a call. Our corporate headquarters is 632-7886. Our website is egtax.com. We're ready to help you get those appointments in. Until next week, give us a jingle if you need us. I'm Esther Golias, the Tax Lady, with Tiffany Fabian, Christopher Fabian. Happy Father's Day. Thanks for listening. God bless. Bye-bye.